So, hello again, everybody. This is another podcast of all things real estate, where we examine real estate issues, particularly in the Bay Area. My name is Ken Buchanan. I'm a realtor with Century 21 Real Estate Alliance. And we're very happy today to have Anita Steburg. She is a lawyer. She works for the Steburg Law Firm, and she's going to tell us specifically some things that we can do to try to increase our tax deductions, especially for homeowners, things that we can do. So first of all, thank you for being here. Anita, thank you for your time.
Oh, it's my pleasure. Thank you for having me.
So maybe you could just start with a basic question that people often ask. Maybe you can basically explain the difference between a tax deduction and a tax credit.
Sure. A tax deduction is a dollar for dollar decrease in the amount of taxes that you pay. For example, if I have $100,000 of income and I have a deduction of $10,000, my calculated tax is going to be off $90,000. Whereas a tax credit, it is a credit against the amount that I will owe. So if I end up owing, say, $15,000, I can have a tax credit of $10,000. I'll be responsible for the remaining $5,000.
Okay, good. And
a deduction is generally preferable.
Okay. And a tax deduction is that basically what?
The tax deduction is it is a dollar for dollar decrease of your income that is the income that is taxable.
Okay, good. Okay. And again, you're going to tell us about some of the amazing deductions that are available for homeowners.
Yeah, so let's talk about the big one, and that's always mortgage interest. It's probably one of the bigger ticket items. And your interest on your mortgage is tax deductible, which means you can claim the amount of interest. Now, there are some limits with that in the tax world, but you can deduct your mortgage interest up on, and currently if you were to buy a new house this year, it's of $750,000. So that is the amount of the mortgage, and then you would deduct the amount of interest that's attributed up to $750,000.
Great.
So another one is property taxes. That is deductible. It's generally if you're itemizing your taxes, but you can deduct the property taxes that you owe. Another one
is there a limit to the amount of property tax that you can deduct?
Yes, there currently is. When the new tax laws came into place, there's limits and floors. It is on an itemization, but they are limited, and then there's floors and ceilings that you hit with those, since it is on a Schedule A, which is an itemized.
Right.
Additionally, if you are looking to do something that is more efficient and maybe green, if you will, for example, solar, there are some specific deductions and credits for solar. And this started a couple of years ago. The amount of the percentage that you're able to deduct decreases. So for example, in 2020, if you put in a solar panels, you're going to be able to deduct 26% of those costs. For 2021, it reduces down to 22%. So it's definitely the time to do it. If you're looking at it and you're doing it is in this year, because you're getting more bang for your buck as far as tax deductions.
Good. What about general home improvements? I mean, solar would be a green thing. What about general home improvements? Things like
general
kitchen or bathroom or things like that.
General home improvements on your primary residence, it will increase your tax basis when you sell the property, but you're not able to deduct those as you do that. So you make sure that you keep all the receipts, make sure you keep all of your records, because that will increase your tax basis. And the tax basis, what's important is the higher your tax basis, the lower amount of capital gains taxes that you will owe when you sell the property.
Okay.
So another one is home office. Here in Silicon Valley, we have a lot of people that are entrepreneurs. A lot of people use their home office, and sometimes that's their only office.
I think it's going to increase more in the future also.
Yeah, no, absolutely. I definitely agree that. Now, there are some restrictions, but there is $5 per square foot up to $1,500 that you can deduct for a home office deduction.
Yeah.
There are some limits with those. There's certain criteria, especially if you work somewhere else, but it is available. And a lot of times it's easier just do the $5 per square foot, then keep track of all of your utilities and all of your expenses that go with your house, and then prorating it based on the square footage that you are using.
Yeah, this can also work to your advantage if you're planning to do a 1031 exchange. We had an expert, Ron Ricard, talked about it, and of course it's generally for investment property, but if you use even just a portion of your home as a home office, you can use that also as a portion in your 1031 exchange. So
absolutely.
Yeah, good. Okay. Well, we always talk a lot about, the benefits of home owning. I mean, we're constantly telling people, not just to, stop throwing money away on rent, increase your equity. I mean, what are the general tax benefits of home ownership? It might kind of overlap in what you just explained, but.
So a lot of these deductions that we're talking about are not available for renters. For example, your mortgage interest deduction is not available if you are renting your house. If you are renting your house, you're not going to be able to deduct real property taxes because you don't own that house.
Right.
So a lot of these are only available is if you own the house. Additionally, when you sell the house, you also get a portion of the sales proceeds excluded from capital gains. So it's $250,000 per person. If you're single, it is $500,000 for a married couple. When you move out of your rental house, and go to your next rental house, you don't get a bonus from your landlord. So a lot of the deductions that we talk about home ownership are only available if you own the home.
Okay. Well, I know it's a very, very big topic. And again, if anybody who's listening out there has additional questions, please feel free to reach out to me. Please feel free to reach out to Anita, not just for tax issues, for things involving trusts, probates. Her contact information will be on our website in the post. So again, thank you. This was another installment. Thank you for your time, Anita.
Thank you, Ken. I appreciate it.
Okay. Take care. Bye.